going to do is kind of give you a little bit, and I know you guys have heard this multiple times, but Helen hasn't. So I will go a little bit over my background, and it probably has an effect on the way that I do my business. One thing that I guess all of you realize, I'm a workaholic. I mean, that kind of starts off for me, mowing lawns to selling combs, graduating at 14 to actually going into retail with men's clothes. And then went full-time when I was 16, and I worked full-time ever since then. And so I was actually in retailing full-time for 8 years, and when I left, I was the buyer for 3 Belk stores. They're men's, women's, and children's shoe buyer. From there, I went into public accounting, and I spent 3 years working for McGladrey, what was their home office then in Greensboro, North Carolina, and did auditing work there for 3 years. And then came to Atlanta in '77 and went to work for a computer software company, and went to work in a small staff of CPAs providing advice to the products on how things should work, you know, for tax purposes, for general accounting principle purposes, and did that consulting work, teaching, training. That's probably one of the more valuable things that I did, probably was the training part, because that worked on or helped on presentation skills. When I left, I was the prior jobs in the last couple of years was headed up their commercial consulting area, then their mutual fund consulting area, and then lastly their international or their overseas consulting area. So, and then I decided to go out on my own. And it's hard to believe that's been 20 years ago. I went out, took the small practice that I had all through that same period. Small practice, again, workaholic, working on Saturdays and Sundays. Took that and grew that into a larger practice. Worked out of the house for a couple years, hired Glenn, a CPA. She's still with me today, and that's been 18 years ago. But moved out into the office space that we're in about 16 years ago. And that's where I've been ever since. As I mentioned, the work that I do is probably about 40% account, 45% accounting, and about 55% in the tax area. Most of my clients are kind of like what you would expect in Atlanta. They're service-oriented consultants, there's photographers, training services, real estate, chiropractors, hairstylists, car wash, dentists, all the contracting trades, and so on. Very little, I guess you might say, on the manufacturing side. Had a little bit through the years, probably back to my auditing days, had a lot more back then, even when I was auditing. Cover some of, what I'm going to break is cover some of the questions you guys have passed me last week. One dealt with the vehicles and auto, and the same $25,000 Section 175, and that is a special deduction for vehicles that are rated with a gross loaded weight of over 6,000 pounds. And originally that was made for the Sierras and the Ford F-150s and that kind of stuff. And then, because SUVs came out and they rated in the same category, they got the same treatment. So originally it was for the work vehicles, but the heavier SUVs are also covered under that. And you can write off up to, if it's used for business, you can write off 100% for business up to $25,000. And that could be on a new vehicle or a used vehicle. A lot of the special depreciation rules, bonus depreciation, things like that apply only to new. That's to spur new purchases, new manufacturing. But this old deduction, and a good one, is for new or used. Somebody asked me about cell phone. Cell phone is deductible. What I would do, though, of course, if it's 80% for business and 20% for personal, then that's what we should do, is take off 80% for business. The rules on cell phone have laxed a little bit. It used to be you were supposed to keep a contemporaneous record of it and all that kind of stuff, which no one did. That rule has been dropped. Someone asked about apps being deductible. Did I read that question right?
Yeah, it was in there.
Okay.
It wasn't me. I don't know who wrote it.
Okay. If it's a business app used for business, then of course it's deductible. Any business expense is that you use in your business. But apps you use are pretty inexpensive, so you can kind of convert that to say, what about software? Yeah, business software, of course, you can deduct. One question asked was, what about the most often missed deductions? I think probably if I'm doing it, none of these are missed. But if you're doing it yourself, the office and the home, you may qualify for it, and it may be way too complicated. to actually get into and get involved if you're trying to do it yourself. So people may simply not do it. Now, some people still have the impression the office in the home is more risky with the IRS. Well, that's not really true. It maybe was about 20 or 30 years ago, but since, gosh, I think it's probably been at least 15 plus years ago now, special rulings, the Solomon case, the Supreme Court ruling which went against us, and then Congress came back and reversed the whole thing where it is more liberal now than it's ever been. And so if you want to know if you qualify or not, we can talk about it and see whether you actually really do or not. But it is not an audit flag in my opinion at all. Another item would be in the retirement area. We want to take advantage of all the retirement options that we have for getting tax deductions, as well as maybe some that we don't, like Roth IRAs. But I can help guide you through that, but those are often possibly missed too. I think one that I do see missed a lot, and it's really just a timing difference, but for a cash basis taxpayer, which most of us are, I'm a cash basis taxpayer for tax purposes, credit card purchases are deductible when they're put on the credit card. Now that's a contradiction, it sounds like, to say, well, wait a minute, I'm cash basis, I haven't paid for it yet. But no, it is, and it goes back to a 1970 ruling which had to do with contributions and that kind of stuff. And we've just kind of pushed the door open where that December Amex bill gets on the books too and is taken as a deduction, even though, of course, the bill didn't even come in until January, and of course you haven't paid it yet. And so that's something that is probably always missed. But it is. If it is missed, though, it's just a timing difference because it just means you're doing a different 12 months. As far as future questions that I got, future law changes, what's getting ready to come up, the answer is we really don't know. But what about anticipation of certain things, like what about the tax rates? The general consensus or feeling is that the tax rates, no matter who gets in, are going to be similar to what they are right now, with the possibility that the tax rates on folks over some number may actually go up. Now, how does that affect us, though, as far as what do we do this year? Because we're not going to know. Nobody's going to touch anything until after the election. And maybe a few things will get touched in that lame duck session. And maybe something, more minor type things, I think. But we'll have to just wait and see. But you know, you and I have seen with more, even the time we've been meeting here together, that even if the rules don't get put in place by the end of the year, what happened before? They were put in place, I don't know what it was like, September, October, November, December of the next year, retroactive all the way back to the beginning of the year. Same thing could happen again. Now, that doesn't allow you to do any tax planning, but that is probably what would be the case, or could be the case. Question on the state tax, same thing. The feeling is that no, it's not going to change. It's going to stay really right where it is right now, probably no matter who gets in the White House. The only thing you could possibly do at this particular point, I think, considering the tax rates may go up, and you know the talk about capital gains rates, there has been talk about that, is maybe if there's certain things that you wanted to sell or thinking about selling, maybe you should. Maybe you should go ahead and lock in those capital gains rates on 2012 and not wait and gamble to see what they're going to be in 2013. So that's just one suggestion on that. Now, I think you guys pretty much know a flavor for what I do, accounting-wise and tax-wise. I think some of the advantages to using our firm is that the experience covers probably, I don't know, 400, 450 plus companies through the years. And I think that experience comes to bear, in your particular situation and how it could possibly help you. A client can spend their time managing their business and not worrying about that next pothole they're getting ready to step in, and therefore giving them peace of mind. So I think really with us, you've got a CPA in your court that is looking out for its clients and for the new tax rules and the court cases and the regulations and how they affect the people, the clients that I have. I'm constantly looking out for that. When I go to training courses, which we do every year, about 60 hours of it we do in December and January, constantly putting notes or making notes, this point for this client, and so on. So you're constantly looking out for that. A good referral is someone that's just getting started. Now that could be like Debbie Jackson, Ron, that you referred to. Again, just getting started. If you get started off on the right foot with the right entity and somebody in your court, you're much better off. But you could have some folks that have tried to wing it on their own, tried to do the research or take the chance, save a little bit of money, and those people may have gotten to the point now where they feel like they need to move ahead and need somebody a little stronger in their court, and that could be a great referral. So someone doing it on their own, or someone that has been with another CPA and is looking for someone that can do better tax planning with them or do tax planning with them, as well as spend the time hand-holding if that's needed, which probably is. So one last little thing, just kind of a cute little thing, that if you'd like your life to be a little less taxing, then hire Bill Mastbrook. Thank you.
Very good.
We have time for like one or two questions really quick, if anybody has.
Any questions?
I have a
Yes.
question. Is there a dollar figure or some general considerations that somebody that's starting out would determine which kind of vehicle to use, whether sole proprietor or LLC or C Corp or S Corp, or any specific number or anything that they would keep in mind in order of making the choice?
Making the choice
Yeah.
between those, well, first of all, I would say I would usually say never C Corp. I've had a few, got a few. But the list of C Corps is this long, the list of S Corps is, that long. And proprietorships is probably that long. What advantage to an S Corp, number one, and I hate to say that I'm selling S Corps on this particular point, but it is less chance of being audited by the IRS. The audit percentage has been 0.5% for the S Corp, moved up to 0.85%, so still less than 1%, where partnerships and proprietorships are like 4.5%. So the IRS must feel there are more people out there maybe doing their own proprietorships and whatever, making mistakes, and they feel it's more lucrative going after that group. So I would say that it's very, an S Corp is very similar to a proprietorship and to a partnership in the flow-through aspect of it and the tax rates and everything. But like I say, I think it's less auditable, and also the fact that you can save on the Social Security taxes. And what I tell people really, if their net income is $10,000 the first year, or $20,000 or $30,000, probably as a proprietorship or as a single person LLC, which is a proprietorship unless we do S status. And then as they start getting bigger with $50,000 or $60,000 in net profit, it may benefit them and save them $3,000, $4,000, $5,000, $6,000 a year to be an S Corp. Does that kind of answer the question?
Yeah, thank you.
Okay. Any other questions?
Very good.
Okay. Thanks.
Thank you, Bill, once again. Great presentation.